We're going to have a little fun in my talk. This is the Big Bang Theory, all right? Are juniors really on the cusp of big gains or not? I'm going to present to you, we're going to play a game show here. How many of you are familiar with Family Feud and Survey Says, right? We're going to play something different. It's going to be called Research Says, all right? And we're going to answer 6 questions to determine if we're on the verge of a big bang or not, okay? Did juniors have a big bang only in the 70s? What is the best performing asset year to date? Sector rotation will happen when? A jump in M&A is coming because the average correction in the last bull market was, and the best strategy to participate in a big bang is what? All right, are you ready? So we're gonna vote on these. A big bang for juniors, number 1, our quiz show question number 1. A big bang for juniors only occurred in the 1970s. Is that true? Is that false? Is it number 3? There have never been any gains in juniors ever. Or is it number 4? The 70s were groovy, baby. We had a panel van with shag carpet, cruised the boulevard, slept on the beach. Wait, what did you ask? So how many of you would have to answer number 4? There's some of you here that would have to answer that, all right? Well, the answer is obviously false. There have been numerous examples of big bangs, stocks that have hit Paydirt. They're all in the book. Hundreds of examples. Here you go. Just to start with, 79.80. This is the average of the gains that are in the book, the juniors, from that 18-month period, was over 2,300%. Look at 81 and 83, over 4,000%. That was a bear market in gold. The mid-90s, over 3,800%. The bear market was so bad they called it the nuclear 90s. 2001 to 8, over 1,600%. 2016, over 300%. You think, well, that's not very big. Well, it happened in 7 months. In 2020, in 6 months, 400%, okay? So clearly, there are lots of examples of juniors that have had big bangs. This is a great chart. This is from Joe and Brent at Exploration Insights. In the bull market from 2008 to 2011, 3 years, there were 141 10-baggers in 3 years. And many of these were stocks that didn't stop at 10-baggers. They kept on going, all right? 141 examples of 10-baggers in that short period of time. Now, we're not going to get all of those. You're not going to invest in all those, right? But what if you caught maybe 10% of those? What if you caught even just 5% of them? How many of you from 3 years from now would be very happy with 7 10-bagger stocks in your portfolio? I think it's going to happen again. I love this chart. It's showing the gains of juniors during these each year periods. The green portion of the bar is the top 6 gains of those stocks that year, okay? So in 2020, there you go. The top 6 gained from 900% to over 1,300%. 2021, 562% to over 1,500%. 2022, 191 to almost 1,200%. 2023, 378 to over 1,700%. And last year, the top 6 ranged from a return of 354% to over 3,100%. There are many opportunities for gains. We're not going to hit them all, okay? We will have some losses. I think everybody in the room knows that. But there are many opportunities for big gains in our sector. All right, quiz question number 2. What is the best performing asset, major asset, year to date? All right, I want to see your hands. You get to vote on gold, silver, mining stocks, or Bitcoin. Number 5, you better not vote on this. My wife's asset has been growing ever since we got married. I'm referring to her retirement portfolio. What did you think I meant? Jeez. All right, best performing asset, year to date, is it gold? Is it silver? Is it mining stocks? Is it Bitcoin? Ladies and gentlemen, the best performing major asset year to date Look at that. It's mining stocks. They've outperformed gold. This is as of GDX. Gold, silver, everything else on that chart. This is as of Monday, this past Monday. The point being, we must be long mining stocks. It's a bear market. I've been saying this for a while now. In my opinion, did I say bear market? It's a bull market. It's a bull market. In my opinion, it started on leap year day last year because the day before, February 28th, the Fed came out and said, we're going to raise rates or lower rates, and we're going to do it quicker and more often than we thought. That's since changed, of course. But at that point, gold took off, and it's never really ever looked back since that date, okay? And look at this. If we're in a bull market, we want to see mining stocks outperforming gold, and we want to see the junior mining stocks outperforming the bigger mining stocks. And look what we have. Through May 5th, okay, Monday, gold is up 64%, GDX is up 89%, GDXJ is up 95%. Yes, there's a lot of mining stocks that have been around a while that have not been catching the wind. They're not doing that well. I get it, okay? It's okay. But the point is, we're in a bull market, and we're seeing what we want to see, so you must be along mining stocks, all right? All right, quiz question number 3. Sector rotation will occur for junior stocks when Nostradamus comes back from the dead and predicts it, when I leave Greece because my stocks keep sliding down. Number 3, when Donald Trump becomes Prime Minister of Canada. I'm sorry, don't throw anything at me, all right? Or number 4, when Wall Street and Main Street begin buying mining stocks. That's obviously it, when they begin coming into our sector. So the question is, have they? This is the HUI, the mining stock index, its ratio to the S&P 500. And you can see it's still near all-time lows. You can see on the far right, there's been a little blip there because they started to outperform the NASDAQ and things like that. But look where it was in 2011, what the difference is and how far we have to go just to get back to 2011. It implies multi-bagger returns as a group for mining stocks. We've barely started, meaning there's still enormous upside. Yes, we've had some stocks that have done very well, doubles and triples. Many have not, though. So on the left, this is implied allocation. So it's gold ETFs divided by all ETFs globally, okay? So that ratio shows you how gold has performed relative to other, ETFs. You can see the little blip on the right where gold started to outperform or has started to outperform all ETFs. And the chart on the right is mining stock ETFs divided by all global ETFs. And you can see it really hasn't moved. It really hasn't moved. And yet for both of those charts, look where they were back in 2011. You can see there's enormous potential between now and then. That's what I think we have, is enormous upside potential, because sector rotation will occur when investors leave one asset class and come into ours. Oh, I love this chart. I wanted to throw it in real quick. This is Berkshire Hathaway's cash, the green bar. I wanted to include it because they came out last week and said how much cash they have. They have almost $350 billion in cash. Let's compare that to the 8 largest gold producers. And by the way, that's not the gold producers' cash levels, that's their market cap, their entire market cap. So it's not even an apples to apples comparison. Berkshire Hathaway could buy every single share of every of the 8 largest gold producers and have $100 billion left in cash. Now, they're not going to do that. I'm not saying they're going to do that. What I'm trying to say is that there's enormous cash on the sidelines. It's just going to take a little bit of that coming in. And if you think using Berkshire Hathaway because it's the biggest, we'll go ahead and plug in Apple, go ahead and plug in Facebook, Microsoft, Amazon, all of them, okay? It's just going to take a little bit of cash coming into our sector, and there's so much on the sidelines, it could really be something. All right, quiz question number 4. M&A, mergers and acquisitions, is coming because producers are generating more cash, producers have less debt. Number 3, both 1 and 2, or number 4, this is not my joke, okay? I'm sorry, this is not, I'm not even gonna read it. You can read it. But I know some people that did that, so. It's obviously because producers are generating more cash, number 1, record earnings, record free cash flow. No other sector, major sector, comes close. The green columns are the percent change or percent increase in the left side, earnings, and the right side, free cash flow of the 6 largest producers. Look at the increase in both earnings and free cash flow. Now, we don't have all Q2 or Q1 in yet, so I had to use Q4 of 2024 versus 2023, but you can see the dramatic increase. And there was some M&A in there, right, so that would contribute to that. But the biggest reason is because of the higher gold price. Producers also have less debt now. This is debt over EBITDA, and you can see over there in 2025 and 2026, it's going to be a lot less. So a lot of us were wondering, why in the world aren't the seniors and the producers buying juniors now? They could buy 10 of them for what they could get them 5 years ago. Why aren't they doing it? Well, they have a lot more cash now and a lot less debt now. So in my opinion, we're ripe for another M&A cycle to get underway. All right, quiz question number 5. The average correction in gold during the 2001 to 2011 bull market was 10%, 12%, 6%. My portfolio corrects only after I buy a stock. Okay, how many of you want to answer number 4? All right, what do you think the answer is? Show of hands, 10%, 12%, 6%. First of all, from 2001 to 2011, look how many corrections there were. This is all 6% or more during that 10.5-year period of time. There were 20 of them. That's 2 a year. And look at the far right, there's your average. 12% was the average correction. If you take out the 2008 crash, it's still almost 11%. So what would a 10% correction mean from the current gold price? Back to around 3,000 or something like that. But the point is, we shouldn't be surprised to see a correction, and that will be, every correction is an opportunity for us. If you don't have the shares you want, there's a new company you like that you want to buy shares of. There were even big corrections in the mania, the 1978-79 mania, that 18 months, the last 18 months, pure mania, runaway gold price. And yet, look, there were 2, 4, 6, 7 corrections of 6% or more in 18 months during a mania, and the average was over 10%. So the point is, we have to expect corrections. So if you see that, it doesn't mean the bull market's over, it doesn't mean anything except make sure you buy what you want and get it. All right, number 6, the best strategy to participate in a big bang for juniors is GDX, GDXJ, stock picking, buy a telescope, or join Paydirt Prospector. Yeah, I'm sorry, I couldn't resist, all right? Research says, yes, it's a stock picker's market. There are many stocks that are doing very well. This is my personal portfolio. I'm not beating my chest. I'm just showing you there are many examples where this is happening. They're not all going to be winners. Some are still stuck in the mud. That's okay. But you have to do stock picking. if you want to have a chance to really capitalize on what the market is doing, where the market is going over the next few years. I think at some point all boats will rise, we'll get that kind of environment, but until that happens, you need to do stock picking, and that's of course what MIF is all about. Okay, I'm very serious about capitalizing on this, what I think is a bull market. I'm convinced it's a bull market. I'm convinced it's going to get bigger. I'm convinced the junior stocks are going to rock and roll. So if you want to join us, we have free letters. Peter's Silver Advisor, my Gold Advisor, they're free. You just got to sign up. We both have paid letters. There's the book on the right, Paydirt. We have some copies out here actually for sale, both Peter and I. Jen, where are you? Jen, wave your hand. There's Jen. She'll be out there at the stand if you want to talk to her. If you have any admin problems, she will solve them all for you, I promise. So I hope some of you will join us. I think we're on the cusp of something here, whether it's starting next month or even not till the beginning of next year. But I think what you really want to focus on is companies that can make a material difference, progress, while we wait until that time comes. And that means either betting on discovery, or like our first company, or betting on not just a project doing well, but creating a whole new gold district like our second company. So, all right, thank you, ladies and gentlemen. I hope that was useful.